Hey everybody, welcome back to Complete Trader Academy's daily review. Today is February 27, 2023. So we're going to hop right into it here with the daily chart. So you're going to see here that we opened up. All right, we didn't take that low out first. We decided to go up, take out the previous day's high, and then sink down, and then come back up and settle. Shows a bullish day, but a majority of today's afternoon, morning and afternoon was definitely bearish. Let's go into a smaller time frame here. Let's go to a 5-minute. So here's the deal: 5-minute opened up here, gapped, came back down, tested that gap, and actually I'm going to go to 1 hour. I'm sorry. So we framed the day this way. You got the previous day high right there. And yes, you got those highs there. But the previous day high was a major target. Even that was a major target as well, but the reaction showed that that was the agenda, which was that previous day high. So we opened up here and we rallied up the whole day already. We woke up here, right? So, and 9:30 comes and the market's already up here, okay? So here's the thing. We got this major price imbalance right here, okay? And this is the 1 hour. So we have that block there, this demand block here. We have this imbalance in between here. We had an imbalance in between here. So when the price, we were already here and we woke up, all right? We weren't too far off to taking out that high. So let me go to a 5-minute. And then as you see here, so we were here, right? And we were in this imbalance right here. So this was a good place to buy. If you look on this, if you go on a 1-minute, you'll see that you did have opportunity. A, you were already in this imbalance. B, you did have order flow once you made this imbalance here and then price tapped in, you're an automatic buyer there. Stop underneath the low of the, well, not low of the imbalance, but the low of the imbalanced candle, I should say, and then rode it up. And then once you got here, take a look at this closely. Let's take a look. So you see how we gapped here, right there? I wish they would not do that. So annoying. All right, so you see how we have a major gap right there? All right, and then price came down and made a big imbalance. Well, this is also a red flag, and this is a reaction from that previous day high, right? So 80% is gone already. Then price starts to manipulate and get back into this imbalance, and look at look how it respects that gap. Sorry, this looks a little ugly, I know. But you see how the gap, you see how the candles, and look how perfect they respect that gap. So that's the algorithm showing you its hand in a way, and that this is now sort of a resistance. So sure enough, I'm gonna wait for some more confirmation because I could have been a seller here, but some people, you know, I don't want them to think it's so super unrealistic. So you wait for more order flow and confirmation. You have another imbalance right here. Let me move this. You got another imbalance right there, and then price taps into that imbalance, gets into this block right here, and then is a beautiful sell right there. Stop loss right above the high of the imbalance generally. All right, and then sure enough, these candles are becoming very big. You can see that they're holding. See the bearish candles. So our intention is obviously here, but at the same time we had most of the day already on this swing up, even if it's bullish. I'm gonna go to a 5-minute because it's hard to do this. But even if it's a bullish day, and this will turn around and come back up, and we created this liquidity there, and we haven't took out that, and we have the massive imbalance up there, right? Well, look, as you see the order flow, right? You see the majority of the day is up. Okay, so what do? We had a price imbalance here. We're thinking that it's going to retrace. Why? Well, because we've got a couple objectives already taken care of. The previous day high is one of them. We have the massive reaction here. We even from this is your A to B to C. I'm not saying this we're going bullish and we should be going bearish. So you're looking for sells, but if you notice this higher low, this higher low, this higher low, and boom, we're peaking up. So you know that automatically, if I was to just circle an area of where price should come back to, this would be a reasonable retracement from this low to high. Forget this low to high, or even this low to high. We're looking at this low to this high. This swing from here to here, you're going to get a retracement back somewhere at an equilibrium, somewhere, right? And what do you have in that equilibrium? Well, on that 1 hour, you have that eyesore of imbalance of price, right? So once it came down, it taps this imbalance, taps the block, and it made a nice reaction up. Now, again, I'm not saying that we're going to keep going up, but at the same time, this was the move. This was the trade with them giving you all of this, just like Friday, when we had this massive price down and we were already down here before pre-market. Well, that was to let you know that you're going to be coming down and consolidating and doing some bullish order flow, right? Because high, low, you can see it, right? So this is the same story. We woke up and we were already here. So we're going to get sort of when we reached that top, we reached this bottom. What did we do? We reversed and started order flow that way. Well, we reversed and started order flow that way. See that? Lower high, lower low. Okay, so very, very clear, right? And then if you took a look at the dollar gave it away as well. The dollar showed up. We had this imbalance of price on Friday. This gap, I'm sorry, not imbalance. This gap right here, I drew it out already. And when we were here, look, take a look. It's 8:30 pre-market. The dollar is sinking. And when I saw the dollar sinking, I'm like, okay, well, where is it going to stop right here? Well, I like this area. And then obviously we have the gap. Sure enough, it came beautifully right to the gap. So this whole way down on the dollar, we were going up this whole time. Take a look. Right there. Look at the time. 10 o'clock. Let's just say 10 o'clock. All right. Take a look here. Look at the time. It's 10 o'clock. It's 10 o'clock and it hit the gap beautifully. Well, once I hit this, we're looking for a retracement up with the dollar. I'm not saying it's bearish or bullish. I believe that it's bullish, the dollar, but as far as this range and this area, we tapped this at 10 o'clock, and sure enough, we tapped this at 10 o'clock. So that's how I'm looking at it. I'm saying, and I'm trusting it going. When it was going up, this was coming down, and when this was going up, we were going down, and that's how all this happened. And where am I taking my target to? Well, you have that low there, but I like this area a lot of the imbalance in price, and I still like these lows here. But at the same time, this was the trade for today. Now, as far as tomorrow goes, let's go to the daily chart. You see, if I zoom out, what do we got here? On the daily chart, we now have that high that we made for today, and we have that low, and we're here. So they're engineering. So this is kind of ranging out, kind of like I was discussing here. So you're gonna wanna watch Asia and London. You're gonna want to take profit once you go below lows and reverse the other way, and vice versa. And that's kind of where we're at. Eventually, we will tag this whole area, but it's gonna take its time. And then I do believe we have some news this week, but that's where we're at now. So you definitely want to watch. This is a big dangling carrot too, but they're keeping this low protected at the moment. So we'll see how it goes. I think it could take both sides, low and high. If I made the market, I would, as of where we are now, I would come down and take these lows, take this out, and then come back up. Or I'm going to keep going up. The next candle is going to be bullish, comes right into here, taps, and then sinks down. All right, hope this helps. You guys take care. God bless.